Welcome to your daily dose of dividend. Today we are going to take a look at Canadian National Railway, and it has a market cap of $75 billion. Yeah, of course it's in the railroads industry. It's one of the largest railroads in Canada and also North America. And fun fact is that actually Bill Gates is one of the, if not the largest owner. If you compare it to the S&P 500, it has actually performed similar to it over the last 10 years with dividends reinvested. The sales growth is 3.8%, so that's a small X. The threshold is 4%, so yeah. The earnings growth is 8.1%, so that's a check mark. And also the earnings estimates seems to be in line with the earnings growth of 8.53%. Nice check mark there. The return on capital is quite high at 16%, so that's very nice. And the debt compared to its free cash flow is also acceptable at 3.17 years. And they are actually buying back shares, so that's a check mark. Let us take a look at some dividend data. And the yield is 2.1%, so barely a check mark, but a check mark. The payout ratio is 43%, so yeah, still room to grow with dividends. The growth rate is actually double digits, 12.3%. And they have been growing their dividend for 25 years. So it's a dividend aristocrat. So 9 out of 10 is the score. That's a nice score. And we can see that the valuation graph at Guru Focus actually puts it in a fairly valued state. So what's your thought on Canadian National Railway? Would you guys like it for your dividend portfolio? Railway seems to be quite a stable company, but it's also growing at a reasonable pace, so this might actually be a nice dividend stock. If you take a look at, for example, on Seeking Alpha, you can see that the dividend for 2020 second quarter is missing out, and it says that it only has a 2-year dividend growth. That is not correct, because 30th of June they paid dividend. So yeah, that's not correct. And further on, we can take a look at the valuation in fast graphs to see how it's valued. And CNI is actually on my watch list because it is a dividend stock that I would like to own. And one could see here why, because it has actually quite steady growth. And the growth is also quite high to be at least classified as a railroad and industrial sector. And we can see here, if we zoom out to the maximum here, that it's trucking along quite well. But it would have to come down a bit in price for me to have it in my portfolio. Maybe down to the maybe the 100 range is a good entry point for CNI, in my opinion. But the estimates looks really nice if the analysts are right. Then we can even now, at this bit higher valuation of P22, look at 11% annual rate of return. So even at this bit higher PE, the stocks actually looks attractive. And this is the price of at 110. But yeah, I think maybe it needs to come down a bit more to be a really good deal. That's it for Canadian National Railway. If you guys found this informative, please leave a like and subscribe to the channel for more analysis like this. Have a nice one. Bye.